Hello and welcome to Analysis of Dollar Index DXY. My name is Vic. I'm the founder of Vikensa Capital Management. Thanks for joining me here. So dollar has already been bullish for long period of time now, and we have been following this particular plan for months now. Probably it's going to be more than a year now. So what is happening here? Market has come into this FCP zone, which we already plotted, and it showed some reaction around here. So if I go to, let's say, a weekly time frame, what you will notice that market showed some reaction, some sort of rejection from the upper FCP zone here, right? This was a very good rejection candle. Um, However, the market fell down to the lower FCP zone, got supported by that because you see, this used to be resistance sort of zone, and now turned it to support. Market pushed it up, and this is what we were expecting. In my posts previously in public channels, I mentioned that the market could be heading upwards after getting a support from this one. You see why? Because the market is still bullish, so it is not going to go down very easily. It will perform several tests, maybe create double tops and divergences and those sort of things before it starts to fall down. So we'll have to stay patient. So what we have is that market is doing something like this, which we'll go through in a second. And once the market has broken through that, then only we can look for a possibility of dollar index going down. But so far, the market is still bullish, and anything which is any chance where the market is falling down, should not be taken as signal for short for a longer period of time. You can go short and get in and get out, but because the market is bullish and has been bullish, all of these little things little corrections to the downside, they should just be get in and get out opportunities, right? So what is happening right now is that market is trying to go back into this FCP zone. Now, if it is in the FCP zone, we are not thinking of actually going long. However, I'm looking at weekly time frame. If you are a short-term trader, then you can actually look for short opportunities or long opportunities in this zone as well. However, if you're looking for position trading, or if you're looking for overall market scenario, and DXY is one of the components that you analyze or you look for, then this is not an area to go long on. This is an area to either observe, stay out, or basically just look for short opportunities for now if we get a proper confirmation. Now, if I go to the daily time frame, this is what has happened. The market has actually fallen down into this previous level 110, which was plotted several months ago, and it got supported by that, went into this 113, which is a very, very important level. Okay, why? Because the market was supposed to come here, and you see what happened here. The market fell down. This is an engulfing candle. It fell down, kept on falling down. Now it has come back to retest that, and what we saw here last week was a rejection. However, towards the end of that week, the market tried to recover that. It has not been able to close above 113.482, that particular important level. So the market so far, this candle is still intact. That means the market can still fall down. However, as I said, market overall, the market is still bullish, so we should always be careful, if you are taking any sort of short positions here. So what we should do is we should observe the market in this zone and the structure around it. So what we can do is we can come to smaller time frame and see what we have. Now on smaller time frame, we have a little bit of structure like this. This is a trend line. Market fell down, got supported by low trend line, then got rejected, got supported by that and started to go up. Now, one thing that I'll show you here is this. If I draw Fibonacci from here to here, and then what you will notice that market has come to 786 here, right? 78.6 Fibonacci level. And when the market rejects from 78.6, like this, that is usually a sign of at least a short-term reversal. What I mean by that is this rejection candle cannot be ignored, even though this is sort of has been nullified by the next candle. But you see, this rejection part, this wick at the top, has not been actually violated. The candle has not gone beyond above that. So this rejection candle is still valid. that means that we can still look for possibility of dollar index coming down. Okay, so what I've done is actually plotted few levels for you, and I'll show you, I'll tell you, like, the scenarios which can be there. So first of all, the bullish scenario. Why? Because the overall market is still bullish, right? You see, the market has been going up, so we should look at bullish scenario. What can happen, and what point in time we should be looking for bullish scenario. This is an important level now. Why? Because the market has recently rejected this level. So what we are looking for is that market, if they get a confirmation above this level here, 113.925, then we are looking for next level as 114.478. Then the next level, which is going to be very important. That's why I've colored it in a different color, 115.373, approximately 115 or so. That is going to be very, very important. Okay, so that will be the next level, and after that we have 116 level, which we have plotted and we have already been looking at for quite a while now. So this is the bullish scenario, and in that process you will notice that market will create kind of extended W pattern, and when W pattern completes, the market is expected to fall down once again. So these are all the bullish scenario levels. Now, in case of bearish scenario, why we are looking for bearish? Because as I said, this is engulfing, this is a rejection which is still valid because the market has not gone above that so far. But that means we can still look for bearish scenario. And for that, this level of 112.157, basically this previous low, is very important, because if it actually breaks through that, then this trend line, whenever, like, this gets touched, that can actually give us a bounce up. However, if it continues to fall, then we have 110.9, and then after that we have 110 level, which can come. That's very easy. Now let me show you the other levels and other scenarios as well. See, what's happening here is, if the market breaks through this level of 110, right? You see, the previous support from trend line was here, previous structure was here. If this gets broken and we get a confirmation, then what we are looking for is actually a kind of like this sort of thing, right? If it gets broken, then the market can fall down to 108 or so. And what you will notice that we also have a kind of demand area here. So that can be a scenario, right? The bearish scenario can turn into bullish scenario of a retest. So how do we play this? Again, just to quickly reiterate, if we get a confirmation above 113.927 and 925, then we are looking for this level here. Now I know. Okay, the next level is, sorry, the next level is going to be 114.478, and if that is broken, then 115 approximately, then approximately 116. These are very important levels, okay, on the bullish side. If we see the market breaking through 112, then the touch of this trend line is going to be important, and after that we have 110.9, then we have 110, and if that is also broken, then we are looking for approximately 108 or so, approximately here 108.6 or so, right? Because this is the huge breakout, like sort of like, breakout happened, and so that means there can be a lot of demand around here, and the market is also kind of creating an M pattern here, and that's why it can fall down to 108. So that is what we are looking at now. In terms of other trends, trend based things, let me show you another thing, is that if you bring in relative strength index, RSI, basically the default setting, and if you go to the weekly time frame, as the market has been creating this sort of like, rising wedge or whatever you want to call it, the market has been creating a negative divergence as well. So you will notice that market has been going up, okay, and RSI has been pointing down, right? This is what we call as triple divergence, because this point is above the midpoint, however it is still below the previous one, which means that dollar is getting pressurized to actually fall down at some point in time. And this area, right, whatever happened last week, this can be a very good opportunity for it to form a double top sort of thing, because it got rejected from 78.6 as well. So this is what we have here. Now let me show you a multi-month scenario in case the dollar still finds bullishness above this FCP zone. Then what can happen? Okay, first of all, I think there is an unfilled gap here. around here, 114. Not sure whether um, that will be filled here right now, or after a month or so, after a long time, who knows. And in some of the data feeds, this gap is also not showing up, so I'm not sure whether this is actually a real gap or not. So that's why I've colored it in a different way. It's a gray area. However, the thing that I was just talking about is, if this FCP zone is broken, if the market starts to go higher than this, then we already have a plan ready. The plan is the market is going to come to 116, as we saw, then it can rise to 119. Okay, and then after that we are looking at 127 as our target 3. What do I mean by target 3? So if I go to the monthly time frame and show you the plan, this is what we have planned when we were here, right? The market was here when we created this plan, and the market came to target 1. It has come to target 2, and if this FCP zone is broken, then we are looking at target 3, which is going to be 127 or so. So this is what we have on the multi-month time frame. So hopefully you enjoyed this analysis, found this useful. If you did, please make sure that you support this by hitting the like button, and put in a comment and share it with other traders and trading communities. And your support is absolutely necessary to make sure, that these analysis, this free analysis, can continue in future as well. So I'll see you in the next one. Have a great trading week. Thank you for watching. Find and follow us on these social media channels.